And good evening. This is the Elliott wave update for the NASDAQ 100 from Monday, January 17th, 2022. The NASDAQ and actually the markets did not follow through on what they started yesterday afternoon, in that the markets were moving lower. The NASDAQ had raced down and gotten to 15,507, and then they started to buy it back up. And it basically kind of just hung out. It did not move to a new high above what it had created on yesterday's opening. But nonetheless, the market kind of just sat in a fairly tight range for the balance of the Globex session. And now that we're reopening again, we're continuing to move lower, but still within the range that was created yesterday or during yesterday's Globex session. Now, what does that do for the analysis that I presented yesterday? And it's actually not much. And I'm starting here on the daily chart, just to kind of show the formation that we have the A, the B, and this continues, in my opinion, to be just a larger C wave. And what I have done is basically put in for a third wave to come, what it should look like coming off. And being that this is B1 and this is 2, and then we're looking for that third. Now, I'm going to drop this back down to the hourly so we can take a quick look at inside this. We can see that we have that ABC, which this could be wave 1 of 3, 1 of 3 of C, 2 of 3 of C, and then it subdivides again. So that's another 1 and another 2. It did not break above that high, which was yesterday's Globex opening. And so I'm still looking for it to begin to accelerate, drop below yesterday's, or actually Friday's 15,404, and then also Friday's 15,312, which we got in the Thursday to Friday Globex session. I'm thinking that we need to, again, then break below 15,152. And I'm believing that since it is a third, that we should at least get 100%. That would be the goal in my mind for a third wave. So we get down to 14,501-ish, 14,500, and then rally in a small 4 and come back down and still meet the goal of that support at 0.382. So in other words, this intermediate fourth wave that I am still counting would then still come down to 0.382, which sits right there. And that's on the intermediate level. This being intermediate wave 3. And we're looking for that intermediate wave 4. And that would end here. And then it's off to the races. And again, just to kind of reverberate the Elliott guidelines, that a fourth wave correction or a corrective wave, particularly the fourth, will often end or find support for ending at the terminus, which is right there, of the fourth wave of 1 lesser degree. And that's going to be this minor wave 4, which is happens to be 14,410. So I'm still looking for that move. And because this first wave seems to be so large, the one thing that the third wave cannot be in a 5-wave sequence, it cannot be the shortest wave. So I'm now kind of looking that it needs to pick up the pace, start to come off more quickly, start to break down, get itself down into this level, at least be 100% in the same length as that first wave, small 4, and then a 5, bringing it back down to complete the move. Then we put in the 4, and then I'd be looking for that intermediate fifth wave rally to begin. Now, that's still the preferred count. But I talked about yesterday that we have the possibilities that all the markets might just really start to break down now. It has been something that's been kind of given and thought of, and that we're looking for these corrections, and we're looking for, people have called it a sell-off, a crash, and all kinds of different things, because of now we understand that the Fed will tighten 3 times at least or multiple times this year. And we're looking that they're likely going to start pretty much this month because inflation continues to kind of go unabated. We're not really seeing any relief for prices to stabilize or stop being pushed higher. So the inflation continues to really take hold. And we're witnessing it across the board. We're seeing it in our gas prices. We're seeing it in utility prices. We're seeing it in grocery prices. We're seeing it in a lot of the retail. We're seeing it in agricultural in terms of the ability to get farm equipment, and just across, and it just grows and it grows and it grows as it moves out. That all the different areas, all the different sectors are beginning to feel the inflation crunch. And then of course, there's also just the wage inflation, which is really behind a lot of what is behind this, because our cost of living has continues to go up. So therefore, you're going to be paying more because companies and stores and everything that we purchase from, they need to pay their employees. So everybody needs that raise. And we're now looking towards the Fed to put some control around inflation. If we can get inflation under control, then we're going to see things begin to settle down. We're going to see that people are not going to be able to have to fight so hard for a raise because they're going to be able to afford their lives. So it's a vicious cycle, and it is in progress right now. And so we have to consider that this intermediate wave 3, again, it still holds in place as the all-time high for the NASDAQ, 16,767. So while I still consider the current move intermediate wave 4, we have to leave open the fact that it may not. If the market breaks below 44.10, we have to keep everything alive for quite a while, actually. But the market would have to start dropping below 13,000 before it would start to, and I got to go out to the weekly chart to show you that, where it would start to really indicate to us that's the no break. So it can actually come down to, I wouldn't even expect it to get that low. It just can't break below that high of intermediate wave 1, which is 12,465. Now, if it came down there, it's like, no, it's too big. It's too high and, too deep. And so it wouldn't be a 4. So I'd have to move this all around. But that's the level that we have to allow for the market to tell us, no, we're not going there. Now, I have to tell you, to be honest with you, I would really begin to have my doubts if the market starts to break below 14,000. Below 14,000, it's like, I'm going to let it maybe down to the 50%. On the intermediate level, on the 50% level at 13,682.83, that I would suspect would have to hold. In my mind, it has to hold if this is indeed going to be an intermediate wave 4, and we're still expecting a large enough intermediate 5th wave rally to take the market back up to new all-time highs. So that remains the near-term picture for right now. Now, what can we expect for tomorrow? I think that once we all get back online and we all start to trade, that we should continue to see the market drift lower. Now, I'm not expecting a lot from the Asian markets, and nor am I really expecting a lot from the European markets because we didn't see it yesterday. We didn't see it overnight. We didn't see it today. They did come in and they sold it. They did have moves, but the problem is that the market gets a little bit too wide down here as well. When we're looking at this, it's like the market really, it pretty much goes $1 wide. Now it's $1.25. And it trades on that. So the moves are more violent. The moves are quicker. And so until we as the United States traders get back online tomorrow morning and are able to trade, I don't think that the markets are really going to move all that much. Now, if they continue to move lower, that would be my outlook. That's what I am now looking for. I'm looking for this all to just start to increase as the markets begin to drop. And the acceleration needs to kick in. Now, again, we may just get into this being an A, this being a B, and then we're still now going to do a C wave up, and maybe it gets back up to 15,761. And again, this would be 1 of 3 of C, and then this would be 2 of C. Excuse me, 2 of 3 of C, as it comes up. And we have to allow for that. We have to allow for a move back up to exceed that high, which is 15,653. We do have resistance at 654. And to be honest with you, if I got back up there, I'd have to be able to count 5. And so it all has to be allowed. So this small, we got the initial wave, we still could be within this wave 2 of 3. This is where the third wave began, and now it's a 2 of 3. And that may end up all the way back at 15,762. And that's where the 200, the hourly 200 sits. A break above that level really starts to throw the downside back into jeopardy. So we've been pretty clean, and I don't see any particular fundamental reason or even number reason, or except that we do have earnings coming out during the week. And so we get something that turns heads, and they start believing that the others are going to follow suit. Another sector, another company is going to follow suit and continue to provide for upside. Well, then we'll deal with it and we'll figure out what is this picture. Because again, wave 4 could have ended there. Now, this does not pretend to tell me that. In fact, it's not very clean. It's still looking 3 waves to me. And this is still 5. So we're still getting 3 up, 5 down. That tells me that, number one, that the trend right now is still down. It's still in the corrective phase. Okay, so there we have upside for tomorrow. Downside, I'd be looking for it to start to pick up and really start to sell off and begin to break these levels. And again, ultimately, I am looking for it to get itself, the third wave, to get itself down. That would be a complete. This is 1 and this is 2. Then maybe we get a 3 down here, a 4 and a 5. But down to here for that third wave. Then we get a small 4. Then we get a 5 that brings us back down to here. Okay, that's what I'm going to finish it up for today. Trade smart. Continue to use these moving averages. They are now huddled together right into. Okay, market, thank you. They're huddled all together on the, you can see them, the 50, the 20, the 4, and the 8, all huddled together on the 30-minute chart. That is telling you exactly what is going on, which is not a much of anything. So I continue to look, that's just going to be sideways right now, and likely until we get back in tomorrow morning, with the potential for it to go back up. And if it starts to break down, it's going to start breaking through all of this and cleanly. And then as they start to point down, let's see if I can get that hourly back up and take a look what those are. So we can look at the hourly. You can see we got the 50 that's going to provide resistance on the upside. We got the 20 that's providing support or the downside right now, and the 4 and the 8 sitting right in between. So if the 4 and the 8 break below the 20 and they start to, it will start to drag the market lower. And then we're going to be in alignment. We got the 200, the 50, the 20 sits right there, the 4 and an 8 down below it. Then we're in alignment to go down. All right, that's it for right now. The next update will be on Tuesday, the 18th.